Thanks for listening in once again for Agriculture Today on the K-State Radio Network. Well, the grain markets have been fed new information from the USDA as of yesterday morning in the monthly World Agricultural Supply and Demand Estimates report. This one included information on U.S. crop production expectations for the first time in this new crop year. And joining us to cover it all, Dan O'Brien, grain market economist, K-State Research and Extension, from his office in Colby, Northwest Kansas. Dan, let's begin with the wheat numbers that came out yesterday. And in that, of course, that's of huge interest here in Kansas. And it's obvious now to the USDA and to everybody that wheat production, winter wheat production specifically, is going to be considerably lower this year.
Well, yes, the hard red winter wheat estimate came in at about 590 million bushels. Now, in some past years, we've been to 650, 700 million, 800 million bushels. But this year we've come in at 590. Following on the reports that came out about a week ago of about half of a year ago in Oklahoma, and then tough damage down in Texas. Here we have the wheat tour coming in shortly, and they'll see some green but uneven fields. I'd predict that's what I see in the northern part of western Kansas. But you look at the drought monitor ratings and just reports from even Kansas Wheat talking about using a devastation as a terminology. So what they see on that southern swing and that middle of that report will be pretty telling. So this number came out at 590. Pre-report expectations for that were closer to 650. So that was a surprise to everyone. So the overall winter wheat numbers, that includes white wheat, soft red winter, came in at 1.17 billion bushels. Pre-report expectations we're at 1.245. So here we're at a time when give us several weeks, we'll actually be harvesting that crop, and the true tale of the tape will be told when we pull the combines into the field. And really, it's a little off the path of what we normally talk about, but given the high prices, we probably have more incentive than we normally do to go after even tough yields. 10 bushel out in the field at $10 a bushel. Well, hey, that's a pretty good deal. And some of the cash prices, if you look at cash prices across Kansas on yesterday's closes, $12 plus everywhere except in Southeast Kansas, where it's $11.80. So we have a lot of incentive to get whatever we can out of the fields on the cash side. And I guess we'll see where all this goes. But the one thing that I noticed in that report, the USDA came out and took the gloves off in terms of their projection for the next marketing year's prices. This year closed at $7.70, and a lot of that had some lower price wheat, a relatively lower price in the early part of that of the current marketing year that we're in. Well, for this next one coming up, starting June 1, they put in a price at $10.75. And when you look at futures running out into for the next 12 months, every one of those on today's closes, which by the way, we're up 68 cents. Every one of those starts at $12. Mm-hmm. So we're not quite sure where we're at. I would add one more thing internationally. Also the USDA came out and gave their world supply demand estimates and estimates of production and ending stocks. In that, it's really a key issue now in these markets. They still are counting on Ukraine to come in with a somewhat of a sizable representative crop, and that, given all that we read and understand, and that Antonio Borraca in our shop now at K-State Ag Economics has been talking about, the logistics in that country are at this time are really war torn, and that's a polite word to talk about. To describe it. So the USDA numbers on the world side still include a good chunk of the Ukraine crop coming out. And that is, as we say in economics, that's a very heroic assumption.
Right. And the fact of the matter is, stocks are going to be tight. That was reaffirmed in the report various ways, actually, Dan. So that's going to carry the day in the wheat trade for quite some time.
Right. Well, it's just the USDA came in and it was kind of a surprise to me. You know, again, as you and I have talked about this from week to week, we've been following the wheat export numbers out of the United States, and the USDA is still anticipating something happening, even with only about 3 weeks left in the marketing year, 2 or 3 weeks left. They came in and they raised the export number up for this marketing year, and here we've been trailing behind on that. A lot of times you have this ending flourish of everything getting thrown in, including the products, as I understand it, you know, the processed products. So they're anticipating, even with the struggling pace of U.S. wheat exports, to still come into the end of this marketing year and have and to see a stronger number even than what we've been seeing. So they're anticipating something happening. It is interesting, though, for the next marketing year, though, that they dropped it down to 775 million instead of the 805 that they have now. So we're a U.S. market being held up by a world market. And if we drop our prices very much, then these transportation differentials, currency issues that are all holding our wheat exports back will be overcome, and we start to move a whole lot of wheat. But right now we're kind of functioning as a reserve, really, for the rest of the world market.
What the USDA WASDE report had to say about corn production and corn stocks in the U.S. and internationally. The corn yield for this new crop here in the U.S. was about a couple of bushels short of the average estimate. So there was some strength resulting in the trade immediately after on that.
Yeah, the first numbers out of the gate earlier on were that the USDA had from months ago was 181 bushels per acre, and we haven't. That was been the highest we'd seen by 1 or 2 bushels. So now they've come in this first out of the gate WASDE report estimate and put it in at 177. And so they took that as estimated harvested acres versus planted at in kind of a normal approach, seemingly, and then took the lower planted acres that were projected earlier, came up with an estimate of the first estimate of 14.46 billion bushels. Well, that is fully 500 million bushels less than we've been seeing in recent years when we've been over 15. And to make the balance sheet work out, they had cut back feed residual use by 275 million down to 5.35 billion, 275 from the current year, reduced exports from 2.5 down to 2.4, didn't touch ethanol. So it seems to me that they've made efforts to not show fully that 500 million bushels kept coming off the top of that, and to get ending stocks below 1 billion bushels, because the amount that they've cut back total usage about 370 million. So I'm not trying to besmirch what the USDA had done, but on their first estimate, they cut back usage enough to kind of soften the blow of the lower production. And by the way, you know, we're in the midst of planting right now, going great guns in the wherever we can in the U.S. Corn Belt. Pardon me. And the current soybean to corn futures ratio is below 2. It's at 1.97. And when you look around Kansas at forward contract bids, particularly out in the West, you got a ratio of about 1.75 out in Garden City. These are the top bids, and about 1.84 in Colby. So in Western Kansas, where we're growing corn to feed and some ethanol usage and some exports, but mainly those other two, there's as much motivation to plant corn as the market can give right now. And all across the state, there's no place that ratio is over 1.9. Well, 1.98 is the highest. That's in Topeka. So anyway, the market seems to be giving every incentive to plant corn while there's still a chance to do it, and we'll see where that goes.
And let's finish up talking about the soybean numbers out of the WASDE report. Very little new there to nudge prices all that much. One of the things that does stand out in the latest data, though, and in recent reports from the USDA, we're still seeing good soybean export action, Dan.
Yes, weekly exports as of May the 5th. Well, still waiting for all of South America to get cleared out. 17.3 million bushels. And but the bigger issue is we basically have total shipments and what's bought ahead over of about 2.148 billion bushels, and that's greater than the USDA's projection. So they're clearly counting on some people getting to the end of this market, and you're shifting out of this, rolling over to the next market. And by the way, we have 413 million bushels already out there in that next market. We're about 19% of the way to the USDA's projection of about 2.2 billion, and we still have basically about 17 weeks left this market year. I think overall, maybe the biggest issue is to see what they did to prices. Current marketing year's prices projected at $13.25, projection for next year at $14.40. And again, when you look at soybeans, every one of those, the November soybean numbers, $14.80, the cash price $14.40. So you can kind of look and see what they think about basis. Soybean basis around the US has been pretty wide, 80 cents to $1 under. Well, here they've got November at November futures 14.80. We're projecting a cash price at 14.40. So they're basically looking at a pretty tight year. I think one thing that I'm going to really be watching is what the USDA did in their projection of South American crop size. You had the trade coming in tangibly, strongly below what the USDA said those crops were going to be out of there. So in a way, that's kind of a hidden caution in what seemed to be pretty optimistic world numbers, and that because the USDA is not. I need to double check that. We'll talk about that next week. It seems that they're out of step with what the trade and even what they're saying in country, perhaps, for the size of those crops. And if they come in tight, then that just lends all that much more support to these markets going forward.
Well, again, Dan has put together some thoughts on that USDA World Agricultural Supply and Demand Estimates report and the grain market's response now and likely ahead to those numbers on the agmanager.info website. Check that out, agmanager.info. Dan, as always, great work, and thanks for joining us once more. Enjoy your weekend.
Thanks, Eric. Take care.
Dan O'Brien, along with us each Friday to talk grain markets. He is a grain market economist with K-State Research and Extension. We'll return with more for you after this break. You're listening to Agriculture Today.